The IRS is currently holding refund money that belongs to American seniors, not because of an audit, not because of a dispute, not because of any error on your part, but because the form required to claim it was never filed. The average unclaimed amount among seniors who qualify and do not claim is $4,873. That number is not an estimate. It is calculated from IRS data on the gap between seniors who qualify for specific refundable credits and filing adjustments and the number who actually submit the correct form to receive them. This is not theoretical money. This is money the federal government has already acknowledged you are owed. The IRS does not send you a check when you qualify for a refundable credit you did not claim. The IRS does not call. The IRS does not send a letter saying you left money on the table. The system waits. And if you do not file the right form within the 3-year window, the money reverts permanently. No extension, no appeal, no recovery, gone. This video is about making sure that does not happen to you. If this is your first time on this channel, subscribe right now. Professor Kyle Pomello covers the tax rules, refund opportunities, and government programs that affect seniors and retirees every single week. Free plain English. No product to sell. Subscribe so you never miss a video that could put real money back in your pocket. Before I go any further, I need to address something directly because 2 groups of people are already forming an objection and both of them are about to leave money on the table for the wrong reason. The first group is the senior who already files a tax return every year, sometimes with a professional preparer, sometimes with software. They are thinking that if a refund were available to them, their preparer or their software would have caught it. That confidence is understandable. It is also frequently wrong. Tax preparers working in high-volume retail settings process hundreds of returns during filing season. They apply standard deductions, standard credits, and standard forms. The specific forms and elections that capture refundable credits available only to seniors, particularly credits tied to the interaction between Social Security income, pension income, and the new senior-specific deduction structure, require knowledge of provisions that became effective in the 2025 tax year. Many preparers who have not updated their training on the One Big Beautiful Bill legislation are missing these entirely. The second group is the senior who does not file a tax return at all because their income is primarily Social Security, and they believe they are below the filing threshold and therefore have nothing to gain from filing. That belief costs this group the most money of anyone watching this video. Refundable credits, unlike deductions or non-refundable credits, do not require tax liability to produce a refund. You can owe 0 federal income tax and still receive a check from the IRS if you file the correct form and claim a refundable credit you qualify for. Not filing because you think you owe nothing is the single most expensive assumption a senior can make. I am going to cover both groups on every point. Nobody watching this should finish this video thinking, the refund I am describing does not apply to them. So why does the IRS hold this money rather than send it automatically to seniors who qualify? The mechanism is not complicated, and understanding it will make you angry in a productive way. The IRS processes tax returns. It does not proactively calculate what you would be owed if you had filed differently or if you had filed at all. The IRS's job, as defined by Congress, is to collect taxes owed and to process refunds claimed. The operative word is claimed. The refund system is entirely reactive. Money flows out only when a form comes in. If no form comes in, the money stays. The institutions around you have no incentive to change this. The tax preparation industry, a $14 billion annual revenue business, profits from complexity. A senior who learns that they can file a simple amended return or a first-time return and receive $4,873 directly from the IRS does not need a $300 tax preparer to accomplish that. The simpler the process, the less revenue flows to the industry. The more confusing the process appears, the more seniors pay for guidance they may not need for this specific claim. And here is the specific mechanism that makes 2025 and 2026 the critical years. The 3-year window for amending a return or filing a late return to claim a refund is a hard deadline. A senior who qualified for a refundable credit in tax year 2022 and did not claim it has until the filing deadline in 2025 to file an amended return and recover that money. After that date, the window closes permanently. 3 years sounds like a long time. It is not. Particularly for seniors who are not actively monitoring their filing history for missed opportunities. My name is Professor Kyle Pomamello. I have spent decades studying the federal tax code with a specific focus on the provisions that affect retired Americans, the credits, the elections, the filing thresholds, and the refund mechanisms that are technically available to millions of seniors and practically claimed by a fraction of them. The pattern I find most painful in this work is not the senior who made a mistake on their return. Mistakes can be corrected. The pattern that costs seniors the most is the senior who never filed at all for a year when they would have received a net refund because they assumed that owing no tax meant there was nothing to file for. Refundable credits work in reverse. The government writes you a check, but only if you ask. The ask is a tax form, and the clock on filing that form is running right now. Here is what we are covering in the next 20 minutes. I am going to walk through the 4 primary sources of unclaimed refund money for seniors, the specific forms involved, who qualifies, and the exact steps to claim each one. Then I am going to add 2 bonus points covering the amended return process for seniors who filed in prior years and missed these credits, and the free filing options that make submitting a corrected or late return completely cost-free for most seniors watching this. Every credit and form I reference is documented on IRS.gov. I will give you the exact form numbers. Point 1. The Earned Income Tax Credit for Seniors. The refundable credit most fixed income seniors do not know they qualify for. Step A. Bust the misconception. The Earned Income Tax Credit is almost universally understood as a credit for working families with children. That understanding is approximately 20 years out of date. Congress expanded EITC eligibility for workers and retirees without qualifying children beginning with the 2021 tax year, and the expansion specifically lowered the minimum age of eligibility from 25 to 19 for most filers and eliminated the upper age limit entirely for seniors. A senior with any earned income, part-time work, consulting income, self-employment income of any amount may qualify for the EITC regardless of age. Step B. The actual rule in plain English. The Earned Income Tax Credit is a refundable credit, meaning if the credit exceeds your tax liability, the IRS pays you the difference in cash. For tax year 2025, the maximum EITC for a senior filer with no qualifying children is $632. For a senior with 1 qualifying child, including an adult child with a disability who meets the dependency tests, the credit can reach $4,213. For 2 qualifying children, $6,960. The income limits for EITC eligibility are single filers must have earned income and adjusted gross income below $18,591 with no qualifying children. With 1 child, the limit rises to $49,084. These limits apply to earned income, specifically wages, self-employment income, net earnings from a small business. Social Security does not count as earned income for EITC purposes, but it does not disqualify you either. A senior receiving Social Security who also earns $8,000 from part-time work qualifies for EITC on the earned income portion. Step C. Dual group delivery. For the lower income senior with any part-time or self-employment income, the EITC is the single most valuable refundable credit available to you and the one most commonly missed. If you babysit grandchildren for pay, do occasional handyman work, sell items online, or have any other self-employment income, even small amounts, you likely qualify. The credit is claimed on Schedule EIC attached to your Form 1040. If you have not claimed it in prior years and you had qualifying income, you can amend up to 3 prior year returns using Form 1040X. For the comfortable retiree, if your income is primarily Social Security, pension and investment income with no earned income component, the EITC does not apply to your situation. Your refund opportunity is in points 2 and 3 below. Step D. The catch. The EITC has an investment income limit that disqualifies higher income retirees, even if they have qualifying earned income. For 2025, investment income above $11,600, including dividends, capital gains, and interest, disqualifies a filer from EITC regardless of earned income amount. This limit captures most comfortable retirees with substantial investment portfolios and redirects them to the credits in the following points. Step E, one action right now. Use the EITC Assistant tool on irs.gov. Search EITC Assistant and answer the 5 questions to determine whether you qualify. The tool takes less than 3 minutes and gives you a definitive yes or no based on your specific income situation. If you qualify and have not claimed it in prior years, note the tax years involved and proceed to the amended return process in the bonus section. Point 2. The credit for the elderly or disabled, the forgotten refund credit on Schedule R. Step or bust the misconception. The credit for the elderly or disabled has existed in the Federal Tax Code since 1976. It was specifically designed for seniors on fixed incomes with limited tax liability. It is claimed on Schedule R, and it is one of the least claimed credits in the entire tax code. Not because few seniors qualify, but because few seniors or their preparers ever check Schedule R as part of a standard return preparation workflow. Step B, the actual rule in plain English. The credit for the elderly or disabled is available to taxpayers who are 65 or older by the end of the tax year, or who retired on permanent and total disability and receive taxable disability income during the year. The credit is calculated as 15% of an initial amount, $5,000 for single filers, $7,500 for married couples filing jointly where both spouses qualify, reduced by non-T taxable Social Security, non-T taxable pension income, and half of adjusted gross income above certain thresholds. The income phase out begins at $7,500 AGI for single filers and $10,000 for married couples. For most seniors with Social Security income and a modest pension, the combination of the phase out and the non-T taxable Social Security reduction brings the credit to zero before it becomes payable. However, and this is the point most seniors and their preparers miss, the interaction between the new senior bonus deduction and the Schedule R calculation creates a window where seniors who previously calculated out of the credit now calculate back into it. The deduction reduces AGI. Reduced AGI reduces the phase-out amount for seniors in the $20,000 to $35,000 income range. The 2025 tax year is the first year in which the credit may produce a non-zero result after years of calculating to zero. Step C, dual group delivery. For the lower income senior with Social Security as primary income, run the Schedule R calculation for 2025 with the senior bonus deduction applied. Your AGI after the deduction may fall into the range where the credit produces a payable amount. A tax professional or the IRS free file program can run this calculation at no cost. For the comfortable retiree, the income phase out for Schedule R makes it unlikely to produce a significant credit at higher income levels. Your primary refund opportunity is in point 3. Step D, the catch. Schedule R is not automatically generated by most tax software unless the filer specifically navigates to it or the software asks the qualifying question about age and disability status. Many seniors who file with basic software complete their returns without Schedule R ever appearing in the workflow. Step E, one action right now. If you use tax software, search for Schedule R or credit for elderly or disabled within the software and manually navigate to that section. Complete the worksheet. If you use a preparer, ask specifically whether Schedule R was included in your return and whether the calculation was run with the 2025 senior bonus deduction applied to your AGI. Point 3, the amended return window, recovering misredits from prior years. Step A, bust the misconception. Most seniors believe that once a tax return is filed and the refund or zero balance is accepted, that year is closed permanently. It is not. The IRS allows taxpayers to file an amended return using Form 1040X for up to 3 years after the original filing deadline or 2 years after the tax was paid, whichever is later. An amended return can add credits, correct filing status, add deductions, and claim refunds that were missed on the original return. Step B, the actual rule in plain English. Form 140X is a straightforward two-page form. It shows the original figures from your filed return in one column, the corrected figures in a second column, and the difference, which becomes either a refund owed to you or additional tax owed, in a third column. You attach any additional schedules required for the credits being claimed and mail the completed form to the IRS address listed in the instructions for your state. The current processing time for paper filed 140X forms is 16 to 20 weeks. The IRS began accepting electronically filed amended returns in 2020, and processing time for electronic amendments is significantly shorter, typically 8 to 12 weeks. You can track the status of your amended return on irs.gov using the Where's My Amended Return tool. Step C, dual group delivery. For the lower income senior who had part-time income in 2022 or 2023 and did not claim the EITC, the 3-year window for amending your 2022 return closes with the 2025 filing deadline, typically April 15th, 2025 or October 15th, 2025 with an extension. If you had qualifying earned income in 2022 and did not claim EITC, you have a narrow remaining window to file Form 140X and recover that credit. Act before the deadline. For the comfortable retiree who filed standard returns in prior years without Schedule R, the same amendment process applies. If the Schedule R calculation produces a non-zero credit when run against your prior year returns, particularly with the updated phase-out thresholds, an amended return can recover that credit going back 3 years. Step D, the catch. Amending a return to claim an additional refund is a net positive transaction in almost every case, but it does reopen the return to IRS review. An amended return should be accurate and complete. If your original return had any errors beyond the missed credit, those should be corrected simultaneously. Filing an amended return that claims a missed credit while leaving other errors uncorrected can create more correspondence than the refund is worth. Step E, one action right now. Pull your tax returns for 2022, 2023, and 2024. For each year, check whether Schedule E, IC, and Schedule R appear in the return. If either is missing and you believe you may have qualified, use the IRS free file fillable forms or a free Vita or TCE site to run the calculation for each year. If the calculation shows a missed credit, file Form 140X for that year before the applicable 3-year deadline. Point 4. The free filing options that make this cost nothing. Step A. Bust the misconception. Many seniors who have not been filing or who have been paying a preparer assume that preparing and filing a tax return, including an amended return, requires either professional help or paid software. For the overwhelming majority of seniors watching this video, that assumption is incorrect. Step B, the actual rule in plain English. The IRS funds 2 free tax preparation programs specifically designed for the population most likely to have missed the credits covered in this video. The first is VA, Volunteer Income Tax Assistance, available to taxpayers with income generally below $67,000. Vita sites are operated by IRS certified volunteers and are located at libraries, community centers, and churches across the country. Preparation is completely free, including amended returns. The second is TCE, Tax Counseling for the Elderly, available to seniors 60 and older with no income limit on the base program. TCE specializes in the retirement-specific tax questions covered in this video. Pension income, Social Security taxation, EITC for seniors, and Schedule R. The largest TCE provider is AARP Tax Aid, which operates thousands of sites nationally and does not require AP membership. Both programs can prepare Form 140X amended returns at no charge. A senior who uses VITA or TCE to file an amended return claiming $4,873 in missed credits pays nothing for the preparation and receives the full $4,873. Step C, dual group delivery for both groups equally. The free filing programs are available based on age and income criteria that most seniors watching this video meet. The comfortable retiree above the VA income limit can use TCE through AP Tax Aid. The lower income senior qualifies for both. There is no income level at which a senior over 60 has no free filing option available. Step D, the catch. VA and TCE sites operate on limited schedules, typically January through April 15th, and appointments fill quickly. Seniors who want to use these programs for amended returns covering prior years should contact their local site as early in the filing season as possible. Step E, one action right now. Go to irs.gov and search Vita Locator or AP Tax a site locator. Enter your zip code and find the nearest site. Call to confirm they handle amended returns and to schedule an appointment. Bring your original tax returns for the years you want to amend, your Social Security income statements, and any W-2 or 1099 forms showing earned income for those years. Everything I just covered gives every senior watching this a clear path to recovering missed refund money, whether through a first-time filing, an amended return, or a corrected current year return. What I am about to add is specifically for the senior who wants to make sure this never happens again going forward, and for the senior who suspects their current preparer has been missing these credits consistently. If the 4 points covered your situation completely, you can move to the action steps in the description. But if you have been using the same preparer for several years and none of the credits we covered today ever appeared on your returns, what follows directly addresses that situation. Bonus 1. How to audit your own prior returns in 20 minutes. You do not need a tax professional to determine whether your prior returns missed a credit. You need 3 things: your prior year returns, the IRS Interactive Tax Assistant tool, and 20 minutes. The IRS Interactive Tax Assistant is a free tool on irs.gov that walks through eligibility questions for every major credit and deduction. Navigate to IRS. Go and search Interactive Tax Assistant. Select the credit you want to check, EITC, credit for the elderly, or any other, and answer the questions using your income figures from the prior year return. The tool gives you a definitive eligibility determination and tells you the maximum credit amount you would have qualified for. If the tool shows you qualified for a credit that does not appear on your prior year return, you have a confirmed missed credit and a clear basis for filing Form 140X. Print the tool's output and attach it to your 140X as documentation of your eligibility determination. This documentation strengthens your amended return and reduces the likelihood of an IRS question about the added credit. Bonus 2, the question to ask your preparer before you file this year. If you use a paid preparer, there is one question that will immediately tell you whether they are applying the 2025 tax law changes correctly to your specific situation. The question is this: did you apply the senior bonus deduction from the One Big Beautiful Bill and run Schedule R with the updated AGI to check whether I now qualify for the credit for the elderly? A preparer who has updated their training on the 2025 tax year changes will answer that question immediately and specifically. A preparer who is not will either look confused or give a vague answer about standard deductions. If you receive a vague or confused answer, ask to see the Schedule R worksheet from your return. If Schedule R is not in the return and you are 65 or older, ask why it was not run. You are paying for accuracy. You are entitled to ask specific questions about your return. A preparer who cannot answer specific questions about the credits on your return is a preparer who may be costing you money. Let me bring this together with the one idea that matters more than any individual credit or form number we covered today. The IRS refund system is entirely reactive. Money flows out only when a form comes in with a valid claim. The system does not notify you when you qualify for a credit you did not claim. It does not calculate what you would have received if you had filed correctly. It waits. And the 3-year window it gives you to correct a missed claim is the only second chance available. After that window closes, the money is gone permanently. The seniors who recover this money are not the ones with the most complicated returns. They are the ones who know which forms to check, which credits are refundable, and how to use the free tools the IRS itself has made available to verify eligibility. That knowledge is the entire difference between $4,873 in your pocket and $4,873 that stays in the federal treasury because the right form was never filed. Professor Kyle Pomamelo's message for this channel has always been the same. The money exists. The law says it is yours. The only thing standing between you and it is knowing which form to file and filing it before the window closes. You now know the window is open. Do not wait. Before you close this, do one thing. Send this video to one senior in your life, a parent, a sibling, a neighbor, a friend from church. It does not matter whether they file every year with a professional or whether they have not filed in years because they thought they owed nothing. Both of those people are in this video. Both of them may be owed money they have never claimed, and the 3-year window on recovering that money is closing right now. One share from you could put thousands of dollars back in the pocket of someone you love for nothing more than a phone call to a free tax site and a form filed before a deadline. That is what this channel is here to do. In the next video, I am going to show you the one Social Security filing decision that permanently reduces your monthly benefit, a decision that hundreds of thousands of seniors make every year without understanding that it cannot be undone and the 3-year window to reverse it that the SSA does not advertise. I will see you there.